Welcome to the deep dive.
Great to be here.
So today we're jumping straight into a whole load of developments, really, from around May 5th, 2025. Crypto, blockchain, digital assets. It's all moving fast.
It really is. We've got potential market shifts, big names getting into DeFi, UK regulation.
Apple and NFTs, right.
Mhm.
And those huge plans in the Maldives. Plus, Abu Dhabi and Saudi Arabia are making moves.
Exactly. The sources paint this picture of, well, rapid evolution.
So our mission today is to sift through this, find the key signals, and figure out what it means for you.
Okay, sounds good. Where do we start?
Let's start with the Fed. That interest rate decision coming up May 7th seems to be causing some nervousness.
Oh, definitely. There's this real tension, President Trump apparently wants a rate cut,
Right.
and the market's pricing in like a 50-50 chance of it happening. That's enough to make things jumpy.
And it could potentially push Bitcoin to a new all-time high if they do cut.
That's the speculation, yeah. And there's even that theory floating around.
About the whales.
That maybe some big players are trying to talk down the U.S. economy, spread a bit of FUD.
Fear, uncertainty, and doubt.
Exactly. To drive prices down so they can buy low before a potential rally. Classic market games, maybe.
So keep an eye on Fed Chair John Powell's announcement that YouTube live stream on the 7th could be critical.
Absolutely. The whole crypto market sitting just under $3 trillion right now with that neutral sentiment, 52,
Yeah.
that could swing pretty dramatically based on what he says.
Okay, so the Fed's the big immediate focus. Let's zoom out a bit, get that snapshot as of May 5th. Global market cap, $2.93 trillion.
Right. Still massive.
And the 24-hour volume was up quite a bit, actually, over 7%, $42.96 billion.
Decent volume. But look at DeFi.
Yeah, that's what I noticed. Only $3.93 billion. That's like, what, 7.4% of the total volume? Seems kind of low.
It does, doesn't it?
Yeah.
Especially with all the buzz around DeFi.
Yeah.
Makes you wonder about the real depth of adoption for truly decentralized trading right now.
And the total value lock, the TVL in DeFi, is $1.96 billion.
But wait, is that right? The source notes mention Lido dominating at $20.33 billion. Maybe the 1.96 BA is something else, or a typo in the notes.
Yeah.
Let's assume the bigger picture is Lido's dominance within the overall DeFi TVL, which is likely much higher than $1.96 pieces total.
Ah, good catch. Okay, so Lido's got a huge chunk, $20 billion plus. That makes more sense in the context of the overall DeFi space. But centralized exchanges, CEXs, they still hold a lot of power, right? Over 26% dominance.
They do. It shows that, well, while DeFi is innovative, people still rely heavily on the big centralized platforms. And like we said, that balance could shift after the Fed meeting.
Okay, let's dig into the DEX, the decentralized exchanges. Uniswap's leading, no surprise there, $1.65 billion in 24-hour volume.
The usual leader.
But then number 2, Pump, with $777 million.
Yeah, that one jumped out at me too. Pump.
What even is that? I mean, it suggests a lot of
Right.
speculative action. Meme coins.
Could be. It definitely hints at maybe a frostier side to the current DeFi market. High risk appetite, maybe. Then you've got PancakeSwap, Radium, or Crack, rounding out the top 5. More familiar names.
Right. And stablecoins, still running the show.
Absolutely. Over 92% of total volume. They're the plumbing of the whole system, really.
Tether USDT still way out in front, $41.9 billion volume.
The giant. But Circle's USDC is interesting. $5.7 billion volume, and they keep making partnerships.
Yeah, they seem positioned to give Tether a run for its money long term.
Could be. Competition's good there. And ZUSD at $1.77 billion is also notable.
Okay, so stables are key infrastructure. Now, the big two. Bitcoin. Market cap $1.86 trillion. Dominance over 63%.
Highest in 4 years, the note said.
Yeah.
That's significant. Bitcoin's really asserting itself.
While Ethereum's at $216 billion market cap, only 7.4% dominance. Quite the difference.
Big gap.
Yeah.
Reflects different use cases, maybe different narratives playing out right now.
And then the Made in America tokens. Ripple's topping that list at $125 billion.
And that potential Ripple ETF, plus their stablecoin plans. Lots of potential catalysts there.
Definitely. Then Solana at $75 billion. Circle's USDC itself at $61 billion.
Dogecoin still hanging in there, $25 billion.
Wow. And Cardano at $23 billion.
It's a diverse group.
And just quickly, the prices as of the 5th, Bitcoin around $94,980, up slightly.
Holding steady before the Fed news.
Ethereum just under $1,800, down a bit. And Ripple XRP around $2.15, also down slightly.
And like we touched on, the narrative after Powell speaks, that's likely going to drive the next move for these. The mainstream media interpretation will be key.
Okay, let's shift gears. This Franklin Templeton news. A huge asset manager getting into Bitcoin DeFi, that's massive.
It really is. And, you have the Bitcoin purists saying, leave it alone, it's digital gold.
Right, just store value, don't complicate it.
But Franklin Templeton, well, they see it differently. Their VP, Kevin Fly, is quoted saying it's about building infrastructure.
Not confusing the narrative, but enhancing utility.
Exactly. For technically savvy investors, people looking for yield, better security options, maybe customized strategies using their Bitcoin.
And they've invested in something called BitLayer.
Yeah, BitLayer.
Yeah.
It's a platform for Bitcoin smart contracts and DeFi apps. Uses something called BitVM architecture.
Okay, break that down. BitVM.
Think of it as a clever way to do more complex stuff, like smart contracts using Bitcoin, but without changing the core Bitcoin protocol itself. It works on a layer above Bitcoin.
Ah, okay. So faster, cheaper transactions potentially. And maybe ways for Bitcoin holders to earn income.
That's the promise.
Yeah.
And that income generation could be important for miners long term, especially after halvings reduce the block reward. It adds another incentive layer.
So what are the big positives here if Bitcoin DeFi takes off?
Well, number one is increased utility, right? Bitcoin does more than just sit there.
Yield opportunity.
Yield, smart contract interactions, attracting different kinds of investors, maybe more sophisticated ones.
Diversification for them.
Right. And like we said, potentially higher transaction fees supporting the network. Plus, having a giant like Franklin Templeton involved, that boosts confidence.
Institutional validation.
Exactly. And using layers like BitLayer aims to keep Bitcoin's core security safe.
Okay, but there have to be downsides. The source mentioned negatives too.
Oh, for sure. It definitely adds complexity.
Yeah.
Bitcoin's simplicity is part of its appeal for many.
True.
Then you have security risks. DeFi generally has had its share of hacks and exploits, even on Ethereum. Bringing that to Bitcoin,
Yeah.
you bring those risks too.
Smart contract bugs, protocol failures.
All that. There's also the risk of like fragmentation, too many different layers and protocols. Maybe they don't talk to each other well. Interoperability challenges.
Yeah. And regulation. DeFi is still kind of a gray area.
Big gray area. That uncertainty hangs over everything.
Yeah.
And finally, just educating users. Bitcoin holders used to just hodling. DeFi is way more active, more complex. Big learning curve.
It's definitely a trade-off. Unlocking potential versus adding complexity and risk.
Precisely.
Yeah.
A delicate balance.
Okay, let's jump across the pond. The UK, their regulator, the FCA, is asking for feedback on crypto rules.
Yeah, they put out a discussion paper. Seems like they're trying to figure out how to regulate the space properly.
And this follows some draft laws already aiming to bring crypto under their watch.
Right. They're looking at intermediaries, staking, lending, borrowing, even DeFi itself.
So pretty comprehensive.
They say they want a balanced approach, support innovation, but also protect consumers and keep markets stable.
That's the tightrope regulators always walk.
Indeed. And they're specifically asking about potentially restricting using credit cards or loans to buy crypto.
Ooh, that's interesting. Limiting leverage.
Could be a significant move if they go down that path.
So if you're in the UK or have expertise here, the deadline for reaching back is June 13th, 2025.
Yeah, seems like a real chance to weigh in and shape how things develop there.
It shows regulators are getting serious about setting up proper frameworks.
Absolutely. It's happening globally, really. They know they need clear rules for this sector.
Now back to the US, sort of. Apple, easing up on NFT and crypto rules for iOS apps.
Yeah, this is pretty big news, apparently linked to an antitrust ruling.
Okay, so what's actually changing?
Well, the key thing is developers can now point users to outside websites to buy NFTs.
Ah, so they can bypass the in-app purchase system?
Seems like it. And crucially, they can also allow NFT purchases and sales within apps on secondary marketplaces.
So you could trade NFTs you already own inside an app.
That's how it sounds. It came after a judge said Apple's old rules about out-of-app purchases violated an earlier court order about fees.
The infamous Apple tax. So this is a win for Web3 developers on iOS.
Looks like it. More flexibility, potentially avoiding that 30% cut on external transactions.
Are there still restrictions, though?
Oh, yeah. Things like initial coin offerings, ICOs, and crypto mining within apps still seem to be off limits. But allowing links out and secondary market activity in apps, that's a significant step. Could really boost crypto-native mobile apps on iPhones and iPads.
And Google already did something similar on Android back in 2023, right?
They did. So
Yeah.
Apple's kind of catching up here. Could definitely spur more Web3 mobile development now.
Interesting. Okay, let's talk about something really ambitious. The Maldives. Plans to become a blockchain and digital asset hub.
Yeah, this is wild. A Dubai-based family office, MBS Global Investment.
Okay.
They're planning to pour $8.8 billion into this over 5 years.
Billion. That sounds enormous for the Maldives.
It is. The source says it's more than their entire annual GDP.
Wow, so what's the goal?
Diversification, mainly. Move their economy beyond just tourism and fishing. And the government seems to hope it'll help deal with their national debt, too.
A big bet on digital assets, then. How are they planning to do it?
It's a joint venture with the Maldives International Financial Center. They want to create this global financial free zone, specifically for blockchain and digital assets.
So, favorable regulations attract international firms.
That's the plan. They're aiming high triple GDP, generate over $1 billion in revenue in 5 years.
Ambitious.
Very. They've got political stability, good location, but they'll be up against established hubs, Dubai, Singapore. It won't be easy.
Competition's fierce.
Okay.
Staying in the region, let's look at Abu Dhabi. They're partnering with a company called Alfay, focused on digital wealth management.
Right. This is the Abu Dhabi Investment Office, ADIO, teaming up with Alfay. The goal is to boost their digital wealth management capabilities.
Fits with their broader strategy, attracting global investors, strengthening their financial sector.
Exactly. Alfay uses an AI-driven platform, apparently focused on high-net-worth individuals. They've got backing from PNV Lumat and ADQ.
So AI plus wealth management for the digital age. What's Alfay bringing to the table in Abu Dhabi?
They've committed to significant investment over the next few years, opening a new office, registering intellectual property there.
Putting down roots.
And launching an internship program for Emiratis, plus initiatives to boost financial literacy. It really underlines Abu Dhabi's push into tech-driven finance.
Makes sense. They want to be a leader there. Finally, Saudi Arabia. This feels like a pretty big step for them, partnering with a company called Cody on blockchain.
It does feel significant.
Yeah.
Saudi Arabia is actively moving into blockchain now. This partnership is with their new Saudi Arabian Blockchain Center.
Okay.
It was announced at that Real-World Asset Summit in Dubai. The idea is to speed up adoption of AI, blockchain, and tokenizing real-world assets across the whole Middle East and North Africa region.
Supporting their big national transformation plan.
Precisely. Cody is a founding member of this center. They'll be focusing on decentralized infrastructure, helping shape policy.
Regulation stuff.
Yeah, and trying to solve that puzzle of balancing privacy with regulatory needs. That's key for real-world applications.
And what kind of applications are they targeting?
Things like lending, trading commodities, infrastructure projects, cross-border finance, using blockchain to make those more efficient and secure.
So really embedding blockchain into core economic activities.
It signals a major push into this tech for Saudi Arabia, a space to watch.
Okay, so as we wrap up this deep dive, wow. It's clear the digital asset world is just constantly shifting, isn't it?
Absolutely not static. You've got these huge potential market moves hanging on macroeconomic decisions like the Fed.
Right, the immediate volatility.
And then these really long-term, ambitious, strategic visions from entire nations and major financial players embracing the tech.
It raises so many questions, doesn't it, about the future of finance, technology, regulation.
Definitely. It's all intersecting.
So thinking about everything we've covered, what parts really stood out to you? What opportunities or maybe challenges do you see coming out of all this activity?
It forces you to think about where this is all heading.
Exactly. And remember, this is really just scratching the surface. We definitely encourage you to dig deeper into these areas yourself, look at the sources, and think about how these trends might shape your own view of this digital future that's unfolding.